Hey everyone, I'm Summer from Think Smart Education, and you're watching Pumped and Dumped Weekly, which is essentially the Aussie Crypto Podcast. And every week we break down the hottest crypto topics and have some honest chats. Whether you're a beginner or just trying to keep up, we're here to cut through the noise. And today we're chatting with Troy Harris, who is the best-selling author of Crypto New Rich, and he spent over a decade analyzing crypto markets and helping people generate life-changing wealth. And some are making over $1 million in a short time. We've also got Daniel Velo on the call with us, a key investment specialist at Fast Launch Digital. So to kick off, welcome guys. And one of the hot topics of the week, how about this Solana decline? What's going on there?
Yeah. Look, it's an interesting time. It's an interesting part of the market because where we are right now is is kind of at the bottom of a 60-day cycle, which it was always going to be a bit of a declining month through the month of February. So when you kind of get in the crypto market and you've been in it for quite a while, when you get a combination of technical analysis telling you it's going to be a decline, and then also fundamental analysis like the meme coin kind of fallout, I guess you could call it, of Solana. When you get those two kind of things combining, what happens is essentially a freak out in the market and people freaking out for what I believe is no real valid reason. It's really just noise. And I always say this: everything is noise between here and the end of 2025. What happens, what goes up, down, sideways on a daily or a weekly chart, for me personally, doesn't really concern me. And even though I'm not a massive believer of the Solana ecosystem, and I do believe that Ethereum, even with its downfalls, with its costs and things like that, is a much superior system. There will still be a legitimate spot for Solana in this cycle, and I don't see much of that changing at all. That's my opinion.
Yeah, totally. Hello. And I think, as you mentioned, we see this in cycles time and time again. People jumping into or getting caught into the bit of the fear of what's happening at the end of these cycles that we see time and time again, as I said. And yeah, sell pressure, price goes down, but it's all part of that normal cycle. I mean, things like there's coins at Trump and things might have scared some people where prices shot up and prices shot down. Again, a bit more fear into the market, but I think it's all part of the normal cycles that we continue to see.
That's all it is, just noise. And even though we do these weekly, I would say to people, even though you might listen in weekly, make sure that you're concentrating more so on the monthly side of price movement, because what can happen in days and weeks in crypto really doesn't mean anything. And we could be talking a completely different narrative in a month's time. Yeah, once again, look, I think this is a bit of a storm in a teacup. There's so much stuff that happens, and I get why people are trying to find reasons and excuses and things why a coin may go up, down, or sideways or whatever. But until there's some real genuine article or news that is categorically bad for a coin. I'll use the example of Terra Luna from a few years ago, where it literally depegged, like it had the Bitcoin that was the so-called Bitcoin-backed stablecoin, right? And the stablecoin depegged. Like that's pretty significant stuff, right? And that can definitely lead to a coin or a project massively declining in value. But once again, I kind of feel like these news articles that we see, and this could get a bit boring. These news articles that we see, it's just noise. It's the noise of the week, right? It's the flavor of the week, and then we'll end up reaching this low, which is due to happen to the back end of this month of February. It's got about 8 or 9 days left in this cycle. So the first week of March, I think you'll start to find a basing where we are, and then a retracement in place. But the coiling action of Bitcoin is what's really exciting me at the moment. And the longer that we kind of hover around this 94, 95, 96, 97 $70,000 US Bitcoin. It just reminds me so much of so many other price targets that I've talked about in the past. The $70,000 one when we were coiling around there 8 months ago. And if we go back 4 years, we can talk about it when it was at $20,000. And this coiling action is really, you could kind of think of it like a spring, right? It's like a coiling of a spring that gets tighter and tighter and tighter, and eventually it explodes and it shoots upwards. And that's what we're kind of, I guess, as holders, we're kind of hoping we'll see. I mean, it's inevitable that Bitcoin will always go up, but that's the kind of coiling action that I'm really excited about, as opposed to some random news out of Argentina about a meme coin. I think it's just an excuse and a reason with that stuff.
It's unfortunate that these presidents, just more than one president, they just want to be in the news for whatever reason, and they just found something new to jump on and play, maybe make a quick buck. And it's just a bit unfortunate, but it's probably just a flavor and just adding to the noise of the whole thing.
Yeah. So probably we're trying to probably find and piece together like reasons here. Often I say with crypto, it's often don't be too concerned with the noise and people trying to create reasons for the sake of creating a reason. And there'll definitely be legitimate times where we need to be looking at something. But until that really starts to fester and build up into something a bit more, I feel like it's just that combination of a technical low along with fundamental news that potentially is bearish.
So we're much more excited about the Bitcoin price fluctuations and potentially hitting 200K by the end of 2025. Hey, Troy?
Definitely. I think that's I feel that is a based on price action and movement of previous cycles. I think that's kind of I don't want to say a minimum target, but a target that I feel like could easily be achievable towards the back end of this year. There's nothing on the chart that is pointing to any other direction than the 4 year cycles we've been going through, which, at nauseum, I say the end of 2013, the end of 2017, the end of 2021, and now we're heading towards the end of 2025. So I feel that nothing's changed on that part. And if anything, the constant coiling and of the price and the constant FUD, as we call it, just makes it more exciting and hopefully gives people an opportunity to get in before we see the euphoria. The key part of this year is going to be getting out, not getting in. It's going to be, in my opinion, it's going to be as the price is shooting up, having the right mentality to get out. That's going to be the key part, in my opinion.
Keeping an eye on the price, maybe accumulating as much as we can in Bitcoin, and trying to stay away from these news events where essentially they're just robbing you and out of funds to be able to put it into Bitcoin there. But I think that's the goal, keeping the eye on the goal at the end.
Yeah, and I think that's really important. A point that Daniel's made is that a huge part of this is like, and we say this in all our teachings, and I know you say it as well, Daniel. And this is 80% mentality. The 20% is really just the technical know-how. How to purchase crypto, how to hold it, all those kinds of things. That technical side can be taught to anyone. It's the 80% mindset of being in the right state of mind to capitalize on the opportunities that, in my opinion, are inevitably to come for Bitcoin towards the back end of this year.
I think it was interesting how you mentioned that, because I think for a lot of people that might be watching, like knowing when to get out might be the scary part. So what do you recommend, either Daniel or Troy, around like how people pay attention to this and how can they foresee these things in terms of when it's time to get out?
Yeah, well, I used to say when you get into a taxi or an Uber and your Uber driver starts talking about Bitcoin, but they all talk about crypto now. So you can't get into an Uber and they don't talk about crypto. So I'm trying to remember the last time that I got in and they said, "Oh, what do you do?" And I talk about crypto, and they go, and they're telling me about all the cryptos they have. So that's not a thing that you can look out for. The key thing is like what Daniel mentioned before, is that, and we teach this within our trainings, obviously, but is having like milestones of where you want to go, because it's all right, there might be someone who's waiting for Bitcoin to get to $200,000, but if you've been dollar cost averaging and have got into Bitcoin, in the vicinity of $30,000 to $40,000 as an example, then maybe you're looking to cash in at a lower point, or it could be that your risk profile is much lower, right? You're in a low, medium, or a high risk profile. You may fall into a low risk profile, so therefore you're happy to exit the market well before potential highs hit. So the other thing that I do share in Crypto New Rich, the book, is that is dollar cost averaging out of the market the same kind of way that we dollar cost average into the market. So we want to be dollar cost averaging out at areas where you are comfortable with. Very experienced and very knowledgeable trader once said to me that you don't go broke taking profits, and it's such a true statement. And I think it kind of plays into what Daniel said, is that you need to have that plan, right? Having a plan of, okay, I got in at this price, I dollar cost average in at this price, and what am I comfortable with getting out? Obviously, everyone wants to get out at the highest point possible, but the most experienced market cycle experts and analysts still, as much as they may claim that they can get out at certain times, still struggle to get out at the peak time. So I think what it is not beating yourself up about it. Be happy with the profits that you get, understanding that a 20 or a 30% move, as an example, is bloody huge in any financial markets, right? As an example. And a lot of people, I find, and I had this when I spoke to someone who's outside of crypto just yesterday, where I said, oh yeah, I'm talking about different coins and the different percentages they made. And there was a coin I recommended last January called Mantra, which went from 10 cents and it's currently sitting at like $7.40 at the moment, which is incredible. But that's not normal. All right. That's not normal for a coin to do, right? To go 7,400% in 13 months. But when you're wrapped up in this crypto world, you kind of start feeling like that's normal, and it's not. That's not a normal thing. So I think it's important to reconnect and go, okay, multiplying my money by 74 times is not a normal thing. But hey, it can happen, and you do get it. It's nice when it does, right? That's part of the unicorns that happen in crypto. But often for someone 20 or 30% on their money, we got an email just the other week of someone that was so happy because they bought in when Bitcoin was 62,000 and it's now 100,000, right? So they've literally got a 38% increase within 6 months, and you don't get that anywhere. Tell me anywhere else where you can get 38% on your money in 6 months. It just doesn't happen. So I think that's a really big thing, is reconnecting, getting your feet on the ground and going, you know what, those gains are still amazing, because I would never ever got those gains in any other sector or any other asset class out there.
Totally. And in traditional space, to simplify even further, traditional space, it might be 5% per year, 20% at max the year. If you're happy with that 20 or 30%, then take some profit. And it's also that old saying where a bird in the hand is worth more than two in the bush. From the simplest point of view, if you've put money in and you can take profits out, it might be that you take out what you put in originally and just let the other go and play with that, maybe DCA out. And I think from the simplest point of view, take something, it's in your pocket, it's done. You should be happy, and then the rest is just play.
Thanks for that addition. Look, I've got another one for you, Daniel, actually. We were chatting earlier about the FTX creditor repayments. So they've just started paying back their creditors and kicking off with like 1.2 billion. So I was just wondering, as experts, what do you think it means just for people that might not understand, but what does that mean for the stability of crypto moving forward?
Well, I think the FTX, there was a major collapse some years back, one of the largest we've had in sort of any sectors. Now that people may start getting some of that money back that was owed to them, From a market perspective, maybe some people may be really relying on that money, so they're going to grab that and sell it. Definitely, some people may look to that, and so again, we'll have a bit of noise. We may have a push down in the market, depending on how many of those do sell, but it may provide some sell pressure. But for others, if they're really into crypto and they can see that long-term vision, then I don't think it shouldn't make too much of a difference at all.
Yeah, I agree. I think if anything, it's a win for the small guy again, which is great. I love how the credit is focused on people that are under 50, like people who have had crypto in there under $50,000. I think that's really good. I'd be very surprised. I'm not sure how they've done it. I'd be very surprised if, let's say you had, I don't know, 0.08 of a Bitcoin or I don't know, something. Are they going to pay it back out in Bitcoin, which is worth a heck of a lot more now than what it is then? That's something that I didn't actually look at. Did you see anything on that, Daniel? Do you know if they are?
I haven't looked enough into it, no.
Because that would be the ultimate for those poor people who lost out in that exchange collapse. And we might have a little bit more of a look into that and report on that next week. But yeah, look, the fact that at least they're giving people's money back that they originally that they put in and they had, I think is a huge win for the little guy. But once again, it just serves as a reminder that the old "not your keys, not your coins." You want to make sure that you've got your get your coins off an exchange, per se, a centralized exchange. They're a fancy crypto bank. That's essentially what it is. It's a bank. And unlike, and I'm not here championing for banks, but unlike traditional banks, which are backed by a lot of significant amounts of money, a lot of these exchanges don't have that kind of money behind them. So therefore, when they do collapse, you can lose whatever it was you were holding there, and there's no real place to really look and really try and find that and get it back. I think the fact that it was such a big event in the world of crypto, I'm glad that people are able to get their money back, and I'm glad they're looking after the little guys first, because quite often that doesn't happen.
Well, watch this space. We want to find out if they're paying them in crypto or not.
That would be awesome if they were. I don't know about that.
But look, that's great. But while we're on a roll, I kind of wanted to get into the Tether chat. Like, obviously, there's been a lot of conversation around their unsolicited takeover. So just trying to get an understanding from my headspace what's actually going on there, because it seems pretty wild with the takeover. But what's your read on this move, and is it a sign that Tether is looking to expand its influence? What's going on? Are they trying to go past crypto?
Look, I'll say my quick take, and it's going to be a bit boring again. It's sometimes difficult in crypto to truly find the actual reasonings of why something is happening. And often there's a lot of speculation and news that happens that ends up being not so accurate, shall we say. So I kind of see this event as a bit of a noise event again. I like to look at the different projects and coins and whatever you want to call them, tokens in crypto, as symbols that have earned trust, right? So if we look at it from that perspective, obviously Bitcoin is the number one. It's the numero uno because it's earned trust. It's the original cryptocurrency. You could quite comfortably say it's an incredible store of value. And a lot of people will say that, also becoming, it was originally created as a cash payment system. And that could definitely be the case in the future, potentially with the Lightning Network coming on board and things like that. But what I'm trying to get to is that Tether has been around in its form since, I might not have the dates exactly correct here, but end of 2014, 2015. It's seen out a good 10 years of absolute brutal volatility and has never depegged from a dollar a lot, right? I mean, there was a time, I think it was during 2016, where it had a bit of a depegging for a couple of weeks down to like 91, 92 cents. But like the brutality of the bear market of 2018, 2019, seeing Bitcoin go from 20K all the way back down to $3,000, never really depegging the whole time. The FTX crash, like it's never, there's so much wealth wrapped up in USDT that I hate to say these final last words, but the old too big to fail words come to mind. But one of the big things I'll say that I truly believe, which is something that I saw off a documentary once, which is you can't ever take money off rich people. And I feel like there's way too many rich people that have their hand in USDT for it to get, for any kind of takeover or any other kind of noise to seriously affect it. It's the entire crypto world relies on it just way too massively. And I think there's a real, it's now 10 years that it's been running. I think there's a real element. I personally feel, some people don't feel it this way, but I feel there's an element of trust there, which I think is crucial in any free market. So that's my take on it. It's a very long way of me saying, once again, a very, very long way of me saying a pretty boring answer, which is I think it's, I think it's a storm in a teacup, and Tether has withstood so many incredibly harsh moves up and down. I can't see it being too much more than that. Now, I don't know, Daniel, have you see any more of a take on it than that? I'm not sure.
I don't think there's too much more than that. Tether USDT, it's number 4 crypto coin. Look, we might not know everything about the company because it's been maybe closed up or hidden for a bit, and which is we're a bit of the fun about it. Look, from a normal company point of view, it may feel that getting into a different sector in the country is the way that it's going to boost in sort of those countries. So one, it could be just a normal way any other company is diversifying, trying to get known. Maybe they'll use it as a publicity thing, just that people start using it in South America. I haven't looked to see whether USDT is or is not used in South America, but I think it's just possibly a normal run thing of what companies should be doing or diversifying if it is, in fact, they're trying to jump into that market.
Yeah, I actually see it as a positive thing more than anything, which probably goes against the narrative of a lot of the news cycles. But I mean, how often do you see a news cycle or something in the news that is a positive thing? Very rarely, right? We seem to like to focus on the negatives. So yeah, once again, look, just because of its size, we should never discount it. I think Terra Luna was number 7 when it had its massive collapse. But once again, we're talking a little bit of a different scenario. Like, I loved the idea and I wanted to believe in a Bitcoin-backed stablecoin, but I could never wrap my head around how that could be possible. And my gut feeling ended up being correct when it, gloriously failed, unfortunately for a lot of people who lost a lot of money in that coin. But that's just an example that, yeah, I shouldn't use the words too big to fail, because people would argue that Terra Luna was too big to fail. But once again, it was backed by, backed by something that's a lot, that was an amazing vision, but just it couldn't have been. I just couldn't wrap my head around how that could be possible with the movements that Bitcoin has. Now, once again, like what Daniel said, yes, there's a bit of secrecy around Tether as well, but there's a real trust element there, and I kind of go back to the point of, there's a lot of rich people that would get completely wrecked if USDT had some kind of massive cataclysmic fallout, and very rarely do rich people lose money.
Very, very well said. And I really loved how you mentioned even just talking about trust and integrity with different coins. And obviously, like, meme coins are popping up everywhere. Like, every man and his iguana are talking about meme coins at the moment. But
every man and his iguana, I love that.
Every man and his iguanas talk about meme coins, and obviously there's scams out there. But just going back to trust, what are some of these new meme coins? Like, obviously, like with Trump and Melania, is the trust building with meme coins? Because it's a super fun topic to talk about, but I'm just interested, like, where are we at in terms of like the most trusted meme coins that are like balancing out with some of the scams that are going around as well?
I think trust is in this space is almost tied to time. So like we just mentioned, Tether, it's been around for 10 years. We might not know everything, but it stood the time. It stood a lot of barrage, and it's been a punching bag for a long time. Meme coins, it's something else to say. They can come today, gone tomorrow. We used Trump. People thought it was going to do something, but then after they had success with Trump, it just looked like, well, let's just create another one and let's see if we can create even more. So then Melania got in the action. I mean, if that took off, we might have seen Trump Jr. and all the other family members. Who knows? But in the end, it's yes. But in the end, like all meme coins, they don't stand the test of time. But there has been a couple that have, that we probably mentioned before, and you've got Doge, you've got Pepper that have been around probably the longest of those.
Yeah. Look, 4 years ago, 5 years ago, if anyone was to dig up anything that I said online, I always poo-pooed meme coins. I kind of felt like there was a real like it was just a waste. Like what a waste! It just felt like gambling to me. You know, I could just go and gamble at a casino or at the races. Like that's what it felt like. But I must say that in the last 2 years, I really think since the NFT craze of 2021, 22, probably the last 2-3 years, it's really it made a lot more sense to me after that, because I got a real eye-opening to the real community vibe that NFTs brought. And I think that was what was that is essentially what meme coins are. It's a community. It's a belief system, right? If enough people believe and enough people are involved, then obviously it's going to be something that is going to be successful for whatever that project may be, right? So if you use Doge as an example, you know, for whatever reason, Elon Musk, you know, got involved in it, and you know, so once he kind of had his involvement in it, it was kind of one of those things, you know, the old words I said before, too big to fail. Pepe's had an incredible run. So there's a lot of different ones like that. The issue that we have, once again, which is similar to, sound like an old person here, referring back to all these old things that happened in crypto. But I remember in 2017, 2018 with the ICO craze on the Ethereum chain, you know, there was just so many nefarious characters in there, and nefarious characters are always going to be in everything, especially if it's a new technology. So if you're looking at this from an investment standpoint, you got to understand, what risk profile am I? Am I low, medium, high risk? Okay, cool. I want to take more of a risk with this much of a percentage of coin, and just allocate a little bit to it. You know, the Solana meme coin, I call it the meme coin cesspool in Solana. It brings like a bad illegitimacy to crypto, and that part I don't like. But what I do like is the community side of meme coins. I do like that side. So I think it's got good and it's got not so good aspects. But from an investment standpoint, if we're going to talk about just making money, which is, I'm sure everyone listening to this just wants to know, my take on it is you use a much smaller portion of your investment portfolio to invest in high risk coins like that, because they're sometimes they're here today and gone tomorrow. The Trump one's a great example. That was just like a larger scale meme coin. It didn't do anything uncommon that a normal smaller meme coin did. It just did it on a much larger scale. And, you know, the funny thing is, I kind of feel like with coins like that, they can still come back and have a second wind. And it wouldn't surprise me if the Trump coin did do that. And just one final note I will say to take out of this is that it was interesting that because the beauty about the blockchain is all transparent, it can be tracked. A lot of the capital that was sold in the profit of the Trump coin went into Ethereum, and Donald Trump Jr. put out a tweet a couple of weeks ago saying that it's a good time to buy Ethereum. So is that a grifter, right? Is that someone that's kind of trying to pump their own bags, or is there some kind of legitimacy there that they're trying to potentially build Ethereum out, within the Ethereum virtual machine and that kind of thing? So there's a few angles to look at it, and I've gone way off track on meme coins. I've kind of gone on a Donald Trump rant in a way. I've kind of just circled in and out of random things, but here we are.
Yeah. Daniel, do you have anything to add on that before I lead in with my final cue?
I think with meme coins, the unfortunate part for meme coins is for brand new people who come in thinking this is crypto normal. That can definitely take funds away. Or especially if you're brand new, you buy a meme coin because that's all you're seeing is that noise, and you could get burned from that, and you might walk away from the whole space. That and probably the negative thing out of it. Yes, there's reports that people can make astronomical figures on meme coins, but out of thousands of coins per day, this is only going to happen to one coin. And if we can tell people to stay away, because it's too fast for me. It's the best thing I can say.
Yeah, great. Look, I think just to circle back, which I hate that word, but to circle back on meme coins, like obviously we've just chatted about the huge rise and success of certain meme coins, but we're seeing obviously with more success where we're seeing more scams. And I think that might just be a really nice one to touch on in terms of like what can people expect is out there at the moment, because obviously there's honestly a shit ton, a load of scams out there. But what is excuse my French, but what can people look for on a daily basis just to give people some advice?
I think it kind of plays into that thing that I said before. You've got to know what your plan is. So it's going to be very easy for you to fall into a scam if you're just out here for quick money. So if you're just in the market for quick money and you're like, I've got $1,000 and I want to try and turn it into $10,000 in the next 2 weeks, very highly likely scenario you're going to get involved in a scam or be involved in some kind of extremely risky project. So it's the old sayings, right? The too good to be true kind of things that get thrown around. And it literally is that. I don't know how to be any more direct around that. It is. There's some things that are ridiculously too good to be true. And one of the big things that I will say as a recommendation for people, and we get a lot of people emailing and asking these questions around, this YouTuber said this coin, or that influencer said this coin, and understand that the majority of these influencers / YouTubers are either paid from that project to promote that coin, or they've been given a significant amount of that coin. So therefore it's in their best interest to tell their followers about how amazing it is to, as we call in the space, pump their own bags. So I think it's really crucial to understand where you're getting the information from. Another big thing that I'll say before I throw it over to Daniel is we get so many people that were just like, okay, I don't want to do any. They want to take the lazy option, right? I don't want to do any research. You just tell me the coins you're investing in, and I'll just follow. And even if we were to do that, the issue with that is that you've done zero research on those coins. So let's say 1 or 2 or 3 of those coins do some drastic, crazy price movements. You're in no position mentally or within your plan to understand what am I going to do when this particular coin, or if this particular coin does it, because you have no idea if it's a low risk, medium risk, high risk coin. You've got no idea about the movement. You've got no idea or plan when to take profits. You need to have a plan. So the people I see that get scammed and lose their money all the time, number one, they don't have a plan. Number two, they've got no idea what their risk profile is and not even really interested in looking for it. And number three, I've often found, and this isn't always the case, but in a great number of cases, they just blindly follow someone else. Now, whether that's through laziness, whether that's just through taking the easy way out, and don't get me wrong, it's really it's really enticing to take the easy way out, especially in crypto, because it's so hard, but or can be so hard. But yeah, that's the main things is like try and do a bit more of that understanding and research yourself. Don't just jump in. That $1,000 that you have, you work bloody hard to make that $1,000. Oh, my friend Bob from work turned it into $10,000 in 2 weeks. I want to do the same thing. Well, Bob could have either just got lucky, or he could also be telling you a bunch of crap as well. It's a bit like a gambler. They never tell you about their losses. They only ever tell you about their wins, right? So it's important to understand it from that perspective too.
So have a plan, know your risk profile, and do your own research. Don't just follow Bob.
Don't just follow blindly, right? But just really quickly, I'll say this: a lot of people who are new, because I know this will be a challenge that I'll get from that. Oh, you're saying do my own research, Troy. What if I'm new? I know nothing about crypto. Where am I even meant to start? There are plenty of resources out there to start. I mean, there's so many of our students. We've got just beginner modules to understand just the absolute basics of it. I mean, I'm not here to plug the book, but you can buy, whether it's my book or any other book, for $20 or $30, and you have a very good understanding by the end of that book on how to do the right research and how to be able to find coins or projects or narratives that work. So just whether it's spend time or spend just a little bit of money to educate yourself. Don't just walk blindly into it and hope to, do the old spray and pray. I'm just going to spray $1,000 in here and I'm going to pray it's going to go up. Well, that doesn't always work.
Scams in general, I think it's doing your own research is maybe that one thing that might scare some people. It's not about you having to invest in the balance sheets of companies, looking at there are other strategic things. It could be just very simply finding the official websites and just making sure that those things make sense to you. It can be at least as very simple as that. And why you're getting into a coin is a part of gaming, is a part of AI, or is a part of Trump's bag. At least you understand why you're getting into that coin. And then the other thing that comes to mind about scams in general is why this whole space started. Satoshi, I guess, the blockchain was created because we can't trust anyone. And so on the flip side, if somebody's coming to you and giving you unsolicited information or telling you to do something, well, I think you got to remember, well, nobody cares about me. So why am I going to listen to why am I going to listen to their advice? Well, why is someone giving me a warning about something that I have to go do something else? You got to remember, well, why are you coming to me? So a lot of people also do get scams because they've been told to do something because their crypto might be a jeopardy. But we've got to remember, hey, blockchain was created because you trust nobody. And so nobody's going to come to you and tell you what to do either.
There's so many people that are way too trusting. And we see this, I'm not meaning to point out generations, but I've seen this in especially of what I've noticed in over 50 year old. And maybe that's because a very good chance, people like that, like, my parents, things like that, they came from an era where everything that was said on the news, everything that the government said, it's factual information. We're going to follow that. Whereas I think as we've moved, younger generations are much more questioning things, So yeah, just don't just go in there blind like a deer in headlights. And like what Daniel said, if someone's openly saying all these things, it's like, well, hang on a second, don't be afraid to question that.
Well, I think we'll leave it there, guys. But I just want to let everyone know that we will actually have a link to Troy's book, Crypto New Rich, in the caption. So feel free to click on that. And if you want to learn a little bit more, then we also have a really lovely beginner course ready to go by the title Crypto New Rich. So that will be in the link as well. And as always, make sure you drop any comments or questions you have in the comment section, and I'll ask. Oh, we got Daniel modeling Crypto New Rich right now. Thank you, Daniel. Thank goodness you were here. Essentially, I'll make sure that Daniel or Troy get back to you, and we'll answer all the questions. But if you haven't already, make sure that you've liked and subscribed our channel, Think Smart Education, so you don't miss out on any of these brand new insights and hot topics that we're covering weekly. But thank you, Troy and Daniel.